Saturday, January 1st, 11:08 a.m. New York time. Happy New Year's Day. This will be a market recap for last year's performance of 2021. We'll use a line chart. Start off by looking at the currencies and the US dollar index. US dollar index for the year has been bullish, closing much closer to the highs. Look at the currencies next inside the US dollar by the weighted average. So the three largest currencies, first is the euro, then the Japanese yen, and the British pound. And the euro makes up 57%, a little bit more than 57% of the US dollar. So here we are looking at the euro. It's bearish, declining against the US dollar, but again, currently doing a retracement. Next, we're looking at the Japanese yen. Also, Japanese yen has been bearish. It's trending down. So the euro is looking better versus the Japanese yen against the US dollar. Third biggest currency, the British pound. Here we go, the British pound, big retracement. It's even looking stronger than the euro. Still below the opening of the year, which is over here on the left, but big turnaround. Maybe this will be the big winner for next year. Looking at the Canadian dollar, well, the Canadian dollar has turned around. It's above the opening of last year, which is good, but still way below the highs. As well, maybe it's making a turnaround to be a winner for next year. The Swiss franc, here's the opening for the year. So we're way below it. It's bearish, but it's also turning around off the lows, which the lows were earlier there in the year. Note here, Japanese yen, Swiss franc, and US dollar are considered safe haven currencies. Again, when people are happy, they're spending US dollars. When they don't have a confidence, they want to accumulate US dollars. So we just saw the US dollars are going lower, or we see the Japanese yen still going lower, Swiss franc turning around. So it's showing mixed signals on the safe haven currencies. But again, overall, we've seen the certain currencies pulling up. So again, that's showing that the less flight to safety and more into other currencies. Looking at the Australian dollar now. Yeah, it's below. Here's the opening of the year. We're still below it, but it's turning around. New Zealand dollar, very similar. Yeah, opening the year, turning around, but consolidation phase. The Mexican peso, here we were when we opened for the year, way below it still, but it's turning around. So again, you notice a lot of these currencies turning around off their lows, doing retracements. Several of them still below the opening of the year. But that, again, putting pressure on to weaken the US dollar. Yeah, so that's showing a confidence that people want to spend the US dollar, not accumulate it. They're seeing better things ahead. So again, nothing wrong with allocating funds in investments of other currencies that are proven worthy to be invested in. Now look at next the cryptocurrency, Bitcoin. Here's Bitcoin for the beginning of the year. Here's a high for the year. It did practically a 50% retracement. So it's still above the high, still above the opening of the year, but way off the highs, and the trend is down. Yeah, you've been better off accumulating US dollars. Again, here's a US dollar. That was better investment last year, fact. Yeah, you might have made money looking here at Bitcoin if you did some trades in between. But overall, if you're investing, buy and hold, the US dollar won out. If you're rotating out of the US dollar into other currencies, maybe British pound or maybe the Canadian dollar, you've seen those are turning around already. Got it? But again, the investment of the US dollar has still worked out well for last year, beating the cryptocurrency Bitcoin. So let's look at yields now. Yields trade inverse from US Treasuries. So when the yields go higher, that means interest rates are expected to go higher. Got it? Yeah, yields and interest rates are similar, but you see a lot of financial institutions refer to the word yields. So we're going to look here at the 30-year bond, 30-year US Treasury bond, 30-year US Treasury bond. There's a high, there's a low, we're trending down. So the bond trending down means inverse again. The yields are going higher, putting pressure on interest rates to go higher. So the trade idea for this year has been, well, last year, and still will be this year, trading bearish. I'm trading bearish bonds. As the prices decline, I'm making money in the 30-year bonds. Let's look at the shorter duration U.S. Treasury. This is a 10-year Treasury. The 10-year Treasuries are called notes, not bonds. They're called notes. So here's the high for the year. Here's the low for the year. Look, we're much closer to the low of the year. Again, the lower these Treasuries go, that means, again, the yields are going higher, putting pressure on interest rates. That's the 10-year. Let's look at a shorter duration, the 5-year. Yep, look at the 5-year Treasury note, declining, much closer to the low of the year. So we're seeing even the shorter term yields are putting pressure on interest rates to go higher. And let's look at even a shorter term duration of U.S. Treasury. So we're looking at the two-year U.S. Treasury. Yep, huge difference. Again, the shorter term Treasury is declining faster than the longer term. First here, the 30-year U.S. bond. And note, the 30-year U.S. bond Treasuries has the most volume. Got it, the most liquidity, the most trades. First, followed up, second be the 10-year Treasury notes. So one would expect, by looking here at the 30 and the 10, these will continue declining into next year. And they're not going to continue declining. They might do these consolidations, not expected to the high. So the trade idea again is continue being bearish. Refinance whatever you can at these current lower interest rates. If you want to expand something, invest in more, well, then you might consider taking out loans at these current low interest rates and buying something that can make monthly income. Real estate. Yeah, good real estate, commercial, residential. Good real estate. Now let's go to what most people want to see or relate to, the equity indexes. The equity indexes. The go-to equity index is the S&P 500 index. It's 500 largest publicly traded companies. They are not all in the United States in the S&P 500. Where the Dow Jones index, all 30 of those companies are United States companies, 30 largest public traded companies. But first, we'll look at the S&P 500 index, which are businesses that choose and meet the requirements to be listed on a stock exchange and per cap. So for the beginning of the year, down here, just shy of all-time highs. So again, the S&P 500 is leadership, outperforming cryptocurrency Bitcoin. Yep. So if you bought this anytime during this year, first cryptocurrency, you're a winner here, making money. Very good. And the financial institutions that manage other people's money, or retail investors that manage their own money, they use the S&P 500 as a guideline to want to perform equal or better. So if you're in single stocks, mutual funds, treasuries, whatever you're in, those financial instruments, you should compare them with the performance of the S&P 500. If you're not performing equal or better than this the past year, consider allocating some of your investment nest egg inside the S&P 500. How can you do that? One way is to buy equal shares of all the 500 stocks. I want to do that. Or the other one is to buy the stock ETF, which is Sierra Papa Yankee, SPY. SPY is the stock ETF. Yep. Now let's look at the next big popular equity index, the NASDAQ 100. NASDAQ 100 has 100 stocks in it. There's a NASDAQ composite, which has all the NASDAQ stocks, but we're looking at the NASDAQ 100, the biggest 100 companies in the NASDAQ. Look at that, outstanding. Here's the low for the year, and we're up near the highs. Again, outperforming many other financial instruments. Where we saw the S&P 500 closer to the highs, performing even better, followed second by the NASDAQ 100. Let's look at the Dow Jones, which I mentioned has 30 companies, the 30 largest United States publicly traded companies, also outstanding, closing near the highs of the year, way above the lows. And the Russell 2000, a bunch of small companies, nowhere has the value of the S&P 500. So here's a low for the year, still above it, but way off the highs, so it's struggling. Excuse me. I apologize. Next, we'll look at the Dow Transports. Here's the low for the year. Here's the high for the year. Outstanding, still way above the lows of the year. Very good. The Dow Utilities. Here's the open for the year. Deep retracement, closing near the high of the year. The Dow Utilities. These companies in this index have some of the biggest paying dividends. Got it, dividends. So people that buy stocks, equity, another name for stocks called equity, they buy stocks that pay dividends because they're concerned that stocks may not have that continued growth fast pace, but they still want to earn income yearly. So they buy stocks that pay dividends, typically stocks that have high dividends, and typically stocks that have high dividends are utilities. Yep, your electric companies, your gas companies, your phone companies. The index has several of them in there. You can look at the index online. But again, the NASDAQ 100 is considered growth, and it's very concerning. So there's a rotation. And if you follow the VIX, here's the VIX? There's the high of the year. Again, we're very close to the low of the year. Inside the S&P 500, there's 11 sectors. That's how diversified it is. And if you don't want to go outright and buy the stock indexes I mentioned, we can look at the sectors. You can buy them. They have what's called stock ETFs. And those stock ETFs are made up of several stocks in the sectors. So we'll go by the largest sector first, 11 sectors. And the first sector is technology. It makes up more than 20% of the S&P 500. Here's the low for the year. Here's the high for the year. Leadership, outstanding. Next is XLV, healthcare, makes up almost 15% of the S&P 500, outstanding, closing near the high of the year. XLF, financials, it makes up 13.7% of the S&P 500. So again, it's way above the lows of the year, but off the highs, and it's struggling. Yep, it's been declining. XLY, consumer discretionary, makes up 10.20% of the S&P 500. So here's the low for the year. Here's the high, decline doing retracement. Still looks like it's grinding lower. XLC makes up 9.9% communication services. Oof. There's the low for the year. There's the high. It's declining. XLI makes up 9.7% industries. There's a low for the year. There's a high. Huge consolidation. Consolidation means a lot of the price range occurred within the prior price range. That's what's happening there. It's a consolidation. XLP makes up 6.7%, and it is consumer staples. Low for the year. Sorry, low for the year. The opening for the year, low for the year, high. Near the high of the year, trending up strong. That's XLP. XLE's energy makes up 6%. S&P 500, low for the year, high for the year. Consolidation, grinding down. XLU, utilities, 2.8% in the S&P 500. Here's the low for the year, which went below the opening. And now we're again trending up, strong like bull. Not surprising. XLRE, real estate, 2.7% in the S&P 500. Here's the low for the year. Up at highs, strong like bull. Next is XLB, materials, makes up 2.5% of the year. Here's the opening for the year. Again, near the highs of the year, strong like bull. So again, big clarification. Some of these look similar, like XLK, like the NASDAQ 100. There's a lot of similarities because a lot of similar companies. Again, you're seeing the utilities near the high, strong investment for the year, and the real estate. We'll come up to see what's going to happen come the next year. Yep. Let's go on to the next. What's the next? Well, some of the most popular stocks that are in these stock indexes that institutional investors own, some individual retail own. The FANG Plus. The FANG Plus. First, look at Apple. Here's the opening for the year. Up strong, record highs for the year. Leadership. Microsoft opening for the year, near the high for the year. Good job if that took that investment beginning of the year. Amazon opening for the year, high for the year. Huge decline. We're much closer to the opening of the year, which was here. Yeah, it's declining. Facebook opening for the year, high for the year, it's declining. And Google company changed their name, a few years ago, called Alphabet, but kept the same stock symbol. For the opening of the year, high for the year. It's an acceleration, still strong. Some company that makes electric cars, and I guess the owner likes to be big messages and it's outspoken, called Tesla. Ever hear of it? There we go. Opening for the year, high for the year, draw down, grind down, slowly going down. But still, good investment, way above the opening of the year. Next is November Victor Delta Alpha, NVIDIA, opening for the year, high for the year, strong like bull. And here's another company, you might have heard of them. Netflix, opening for the year, high for the year, grinding down. Something's taking its business model, its competition. Yep. A lot of competition coming out there for business shows or broadcasting shows, the media, Amazon, Apple, Disney, live streaming. And another one, Bravo Alpha, Alibaba. Opening for the year, high for the year, bearish, hitting record lows for the year. Not a good investment. So again, majority of these FANG stocks are underperforming the equity indexes. So you've been better off if you invested in the equity indexes. Invested. Trading different. Trading a few days, few hours, few weeks. But again, buy and hold for the year. The indexes were still outperforming. Let's go into the commodities. We'll first look at the metals. Crude oil. Here's the low for the year, high for the year. It declined off the high for the years. Closing above $75 a barrel. Yep. So if you bought it beginning of the year, you're still above. How do you buy that? Well, you could trade the futures. If you don't trade the futures, if you don't have a broker to trade the futures, you can open an account with a broker that trades futures, or you could trade the stock ETFs. Yep, there's stock ETFs. I'll show you one. For crude oil, you can look at USO, Uniform Sierra Oscar. It's a stock ETF. You could have bought it there, beginning of the year, 32, and already have gains locked in for the year. Very well. Stock ETF. Let's look at another commodity in the energy sector. Natural gas, one that I've been trading a lot as well too. There we are, the low of the year, the high of the year is in a decline. The stock ETF for here, Uniform November Golf. And there you go. Let's look at some other commodities in the middle sector. Gold. Here's the high for the year, low for the year. It's grinding back up. They also have stock ETFs. Look at another commodity in the middle, silver. Yep. There's the opening for the year, the high for the year. So we're still below the opening for the year. First, when you look at gold, yeah, gold's, they're both in these, a lot of whipsaw, but curling up, way above the low for the year, below the high. First, when you look at silver, it looks like it's closer to the low of the year. So the first leader is gold, followed by silver. Let's look at platinum. Opening for the year, we're trading below the opening of the year, but it's making higher lows, turning around. Platinum. And copper. Opening for the year, low for the year, high for the year. We're way above the opening for the year. Outstanding. Copper. Huge metal product used for industrial use. Your appliances, yeah, have a huge need. So it's not just for the buy and hold investment. It has a need for infrastructure. So wink, wink. Typically when copper is going higher, the manufacturers are pre-ordering the material to use for their construction, be it for appliances or piping, gas lines, water lines, whatever they may be using it for. Again, typically a stronger copper leads to a stronger stock market. So maybe that's what's happening. We'll find out coming to next year, see how things go. Again, all these commodities notes are priced in US dollar. So typically if the US dollar declines, you'll see commodities go higher. Okay, the agricultural products, corn, low for the year, high for the year. Yeah, it's above the high for the year. Wheat, there's the opening for the year. We're above the high for the year. So another good investment. Yep, commodities are going up. Commodities from the energy, the metal, agricultural. Soy, there's the opening for the year, the high for the year. Look at that, we're just above the opening for the year. So soy has been retracing back up. And lumber, huge. Here is the opening for the year, high for the year. We're below the opening for the year, so it's bearish. Some mainstream media has been talking nonsense. And hopefully you're not one of those ones addicted to that's your primary source. Mainstream media has been talking nonsense, so that lumber is at record highs. No, it's not. You can check and verify yourself. Yep, lumber is at record lows for the year, and record highs was there. No, most of the lumber in the United States, most of it comes from Canada for construction to the United States. Some of it comes from South America too, but most of it comes from Canada. So again, all these are priced in currencies. So if the Canadian dollar gets stronger, that could also push this up. Live cattle, opening of the year, way near the highs. Yep, your red meat is costing more money. Maybe the product they're feeding it, corn and soy, which I showed. Let's look at the next. Feeder cattle, opening for the year, low, high, it's grinding up. Product to feed the cattle. And for you people that like swine, the pork products, low for the year, high for the year, much closer to the low of the year. Yep. Big difference. Oh, we're ended here.